Well, yesterday, Parliament launched an inquiry into our major banks, scrutinising their savings rates. Since the start of the cash rate spikes last May, the four big lenders have passed on the rises to mortgage customers. Of course they have, but not all savings accounts have been reaping the same benefits, leaving a lot of Aussies shortchanged.
Now it comes as the Reserve Bank is set to see major changes to its board following a recent review. Lots going on. 7 Network Finance editor Gemma Acton is here to break it all down for us. Gem, morning to you.
Hello.
So the banks have essentially been accused of picking and choosing their savings account increases. What happened at the inquiry yesterday?
Well, sadly, not very much. There was a lot of talk about 6 hours of back and forth, how your customer's doing. But the reality is banks don't have to pass on the increases to savers unless they want to, and they haven't been doing that. As you mentioned, the cash rate up by 4%, variable mortgage rates up by 4%, bonus savings rates only up by 3.6%, and regular savings accounts up by 2.2%, so about half of the cash rate increases.
What can be done about it? Because as you say, they're falling all over themselves to pass on the mortgage rate.
They can't hike it quick enough.
Oh, it happens the same day usually.
Yeah.
Well, you know, it's really up to us. Like, we can sit there and we can wait for Parliament to do something, we can wait for the ACCC to do something, but the reality is we can move to banks and lenders where they've got better savings rates. The best out there at the moment is about 5.5. Yes, you have to jump through a few different hoops to do it. For instance, deposit a certain amount a month or grow your balance, but that's much better. Some of these big banks are only offering 1 to 2% on their online savings accounts. The thing is, we as consumers are pretty lazy. You know, we trust our banks. We think it's a big hassle to change. It's not that big a hassle to change. You just need to get comfortable with another bank that's offering a better rate.
Because it seems like they're not embarrassed at all. They're not shamed.
They don't have to be.
They're just like, okay, water off a duck's back.
Between the big 4 banks, almost every Australian bank's with them in some form.
Right.
So they don't really need to worry unless the other big banks start offering much better rates, which they're not.
Droves, yeah.
And so it's up to us.
We'll just have to keep talking about it on the morning show.
And voting with our feet.
Yeah, voting with our feet. Moving on, from next Feb, the RBA will meet just 8 times a year, down from 11, to decide on the interest rates.
Yes.
What does this mean for the general public?
So firstly, it means fewer interest rate hikes because they can't possibly put through a 12 again in that period of time. The idea is 2 ideas here. One is to give the bank more time to think. So if there are fewer meetings, they spend less time preparing documents for meetings. But secondly, the whole reason people have been so angry at the Reserve Bank is there's just not enough transparency. We don't understand why they're making the decisions they're making. We don't understand why there's been so many rate increases in the last year. So yes, it is interesting that it's going from 11 to 8 meetings a year. What's also interesting is at the end of every meeting now, they're going to have a press conference, and that's pretty new. They haven't always been very communicative, but the idea is that we get to understand more and ask more questions and really get their thinking, so to try and predict a bit better what's going to happen in the future. So we're less caught off guard. It is good.
That's good.
There'll be a fair bit of media training and PR training going on at the Reserve Bank ahead of those conferences.
It's not till February, so they've got a bit of time.
Well, maybe if they know
they've
got to face the music, they might go,
That's right.
Yeah,
it's just about being more open with the public who they serve.
Yeah. NAB has become the 3rd lender to relax stress testing for borrowers. So what does that mean?
Yes, so we're always telling people to refinance. It is a great idea. If you're paying 7% on your home loan and there are home loan rates out there for 6%, go out and try and get that deal. The problem is every time you move to a new lender, you have to jump through all the hoops again and fill all the requirements. One of the requirements is really tough. It takes whatever the home loan rate is today, say 6.5%, and says, okay, if it was 3% higher, so 9.5%, would you still be able to pay it? That's pretty high at the moment for a lot of people. So NAB, Commonwealth Bank and Westpac are now saying we're prepared to overlook that one if you're a really good borrower in other regards. So if you've always been good on your repayments and you're not looking to borrow extra money, we're willing to overlook that in certain cases.
Would it be wise to get that in writing, though, before you make the jump, right?
Oh, you have to, because they're not going to give you the loan unless they've signed you off. And so it's not every person they're going to let through, but they said, we'll consider it.
OK.
And Gem, we've seen what is being described as a pretty unseasonable increase in house listings across the country. What's causing this sudden surge in listings?
Usually people sell their homes around spring. You know, the sun's out, people are feeling good, there's enough time before Christmas, gardens are blooming. We didn't get that spring selling season at all last year, and one of the reasons probably was that house prices are falling. Now that house prices are starting to pick up again, more people are putting their homes on the market. The other reason they're probably putting their homes on the market is they just can't afford them.
Do you think that's a big chunk? Some of them forced sales?
It certainly
now?
is. That the experts are saying, given it's such a big increase that we've seen recently, there probably is something behind it. People are looking at their mortgage repayments thinking this just does not make sense for me anymore.
Yeah, Jen, because anecdotally, we know that's the case. I know people who are selling a house. But yet we see the banks sit there yesterday and say to Parliament, no, our customers are happy. No one's reporting to us that they're under stress. That doesn't make sense.
No, and I think we're firstly going to see a big uptick in that, and I think that's why the banks are monitoring it so closely. A lot of the calls the banks are referring to took place over the last year as well, so probably a year ago, before we had an extra 10 hikes, people were feeling okay. It's just, I don't think many people were expecting the rapid rate hikes that we've had since then.
And the RBA, sorry, Carlos, the RBA has again confirmed its commitment to its inflation target too, so we're likely to see a few more still, aren't we?
I don't think anybody thinks they've stopped, unfortunately. I think people are thinking one or perhaps two more from here.
OK, so with more houses on the market, maybe some relief for renters?
Well, I mean, there's more houses to buy, which is good, but on the other hand, a lot of people who look like they're starting to sell or trying to sell are investors, which isn't great because that just takes more rental properties off the market. So we'll have to see how this one plays out. The reality is there are far too few rental properties out there to rent at the moment, and it's not going to change for a while because we need supply, and you can't just create new supply overnight. You need planning and financing and approvals and construction, so it's a multi-year process, and sadly it's been neglected for about 20 years now, so the rental crisis will probably continue for quite a while now.
Jem, thanks for simplifying it all for us.
My pleasure.
Thanks, Gemma.